What's up, guys? This is Rey-Jay back with another video. And in this one, I want to break down what's happening with SPY, Tesla, and the broader markets. I'm also going to talk about why tomorrow is going to be another important day for the markets, as we have some data coming out which could cause some volatility. Just know that I am not a financial planner, so take nothing I'm saying as financial advice. And also, if you guys can, please check out my Moomoo link that's down below, or use my QR code right here to sign up. If you sign up for Moomoo, the link down below, and deposit $100, you're going to get $20 for free Nvidia stock. If you deposit $2,000, you're going to get $50 worth of Nvidia. Deposits $10,000 to get $300 worth of the stock, or deposit $50,000 to get $1,000 of free Nvidia. You're also going to qualify for a 3.6% APY base rate plus a 4.5% APY extra for 3 months, making it a total of an 8.1% APY. The offer ends very soon, so please check out my link down below to sign up or use this QR code right here. There's only 8 days left for the offer. Anyways, now let's talk about what's happening with the markets. So, looking at SPY, we have a possible left shoulder, head, and we're going to see if we're about to form a right shoulder or not. For now, we are on a slight uptrend and we are consolidating in this chop zone, but we're going to see if we break out to new all-time highs or if we get a rejection for a right shoulder before we try to bounce. So I'll be watching these levels very closely to see what happens, but for now, we're watching to see what happens with this divergence. Looking at the 4-hour time frame, there is a bearish divergence forming on the RSI and our MACD. This is just for the short term. This is not like a more macro indicator, but this is just something that's based off what we're seeing for the short term, because there could be some kind of short term rejection coming with FOMC when everyone is expecting a SAN to rally. Now, I'm still very bullish overall. I'm just saying that we could be forming a right shoulder for the inverse head and shoulders before we get a big squeeze to new all-time highs. But there is a chance we get one more sell-off move if we get that rejection. So watch for confirmation. We'll see if it ends up being the case. Now, we'll talk about different perspectives in just a second. Let's first talk about some news. Tomorrow is going to be Monday, December 8th, 2025. At 11 o'clock a.m., we have the consumer inflationary expectations reports, and at 11:30 a.m., we have the 3 and 6 month bill auctions. So watch and see what happens as time goes on. On Tuesday, we have the JOLTS job openings and job quits reports at 10 o'clock a.m. That could also cause some volatility. This could be more important for the markets, especially since the labor market affects the Fed's policies. So I do expect some volatility for Tuesday, but this data is delayed. It's coming out for the months of September and October. It's still delayed data, but we'll see what it leads to. Last but not least, Wednesday will be the biggest day of the week because we have FOMC at 2 o'clock p.m. We have the Fed interest rate decision coming out. We know the Fed will most likely give us a cut, as there's currently an 86% chance of that happening. So a 25 basis point cut is to be expected. Then we have the economic projections reports. This will tell us what we're looking at in interest rates the first, second, and third years out, and then also what we're seeing for the longer term projections. And then the last but not least, the most important thing will be the press conference with Jerome Powell giving a speech. Now, Jerome Powell, his tonality will have a big effect on the markets. If he's dovish, that could be more bullish, but if he's hawkish, he could cause a big rug pull. And that's the thing to be very careful for on Wednesday. It's going to be the most important day of the week. Now, besides that, when you look at the Fed's policies, they are once again seeing an increase in their repurchase agreements for the last couple of weeks. This is a sign that they are once again easing a bit more and they are transitioning away from quantitative tightening. But what's interesting is that the question is, will they continue this trend? And then if they do so, are they going to be will Jerome Powell, will this affect his like overall tonality? Will that have an effect on the markets when Jerome Powell mentions this? Or is he going to be more hawkish initially, which causes some kind of like temporary dip before a big bounce for the longer term because of this? Because for the long term, for like 2, 3, 4 months out, this is bullish. I'm very bullish to start off 2026, heading into January and February. I'm very, very bullish because of this. But for the short term, if we get one more pullback, it could happen. Just in case it happens, I would see that as a nice buying opportunity. So we're going to be watching to see if we get a temporary pullback before we start turning more bullish because of all these treasury repurchases. Right, I'll talk more about that in just a second. A couple more things when it comes to earnings. There's not really much for tomorrow, very, very minor earnings. We have more retail throughout the week. Tuesday has like Campbell's and AutoZone and a few more like that. We also have GameStop after market close. For Wednesday, we have Chewy. alongside Oracle, Adobe, and a few more. And for Thursday, we have a couple such as Costco, which is going to be one of the biggest ones for the week. It's a big retail stock. So we'll see what that leads to. But that's it for retail. Right now, the market's getting very close to a more neutral position as we're seeing the VIX drop. Momentum is at neutral for now as we're turning more and more bullish as time goes on. And then the puts call option ratio is at fear. We're going to see if this bounces or not, but for now, we're seeing puts being closed and the VIX is approaching a big support. So, what do I think is going to happen? Well, like I said before, guys, I'm very, very bullish to finish off the year. I'm very bullish for the end of December and January and February. I do believe that from this period, we could be looking for a big pump towards the end of the year. But before that happens, before we get the big squeeze and we start breaking all-time highs, we might get a small pullback first. It's possible we get that with this bearish divergence. Also, the VIX has a very, very bullish falling wedge that's forming, and simultaneously, I think that the market is showing some signs of exhaustion at these high levels, and this would be a very, very interesting trap by market makers since everyone's expecting this. We just go to all-time highs, we consolidate, and just start to rally. But what if they give us something completely different? The 4 hour has this bearish divergence, and then when you go to like the daily time frame, there's this unfilled gap on SPY back down to 676, and then there is a tough resistance close to 690. So if I want to be super bullish, I want to see us basically close above 690 and hold it. If the 690s hold, I could be looking for 700 then. Then we could invalidate this perspective. However, I don't think it's as likely. What could end up happening is that we see these like fake outs, we consolidate, but then whether it's before FOMC or after FOMC, if Jerome Powell is hawkish, he could surprise the markets and we could be getting some kind of sell off first, back down towards our 200 EMA or a little bit below that. And then once we form that right shoulder, we could just make a full recovery. And then we start this Santa rally to close off the year. We could be looking for a move like this as another strong possibility, because another thing I'm looking for is this very, very key retracement area right here. This would be a retest of our golden pockets, and it would be something that really tricks a lot of people from what I'm seeing, because when you look at the VIX, for example, going down to the VIX, it loves to bounce near 15. There's a bullish divergence that's forming. And ever since October, we've always been bouncing near the 15s. It's been doing that for quite a while, if not the 14s. So this tells me that the downside for the VIX might be limited and we might be looking for a big bounce very soon. There's also this is a triple bullish divergence on the VIX. We have a triple bullish divergence that could be indicative of the fact that the VIX is going to bounce soon. That could be another sign that SPY wants to see some kind of rug pull. Now, there's other reasons why I'm talking about this. I'm just going over a couple of them. We also used our indicators such as forecast, which is suggesting there's going to be some kind of like drop coming before we start to squeeze higher. And then we're also watching the possibility of an inverse head and shoulders here. So if we can't take out this high, the all-time high on SPY, we could consolidate for tomorrow, and then we could be looking for that right shoulder before we try to squeeze like that. That's also another possibility. So what's my prediction for tomorrow? Well, for tomorrow, I think that we consolidate again. I think the market's going to try to pop a little bit in the morning, just like we've been doing. Turn back down, just trade sideways. We are making higher lows, so we might be trying to ride this 20 EMA higher. But then we might just continue to shop around 685 before we end up turning down. So watch that very closely if that ends up being the case for SPY. There's a bearish divergence, so be careful. Same thing could be said about the triple Q. So the triple Q also has an inverse head and shoulders here, a very similar pattern to NQ. And we're at the resistance right here. We have not been able to break past the resistance to break out. We did fill the gap, I think, to like 629. Then we came back down. We're just consolidating. So I want to see us break the 630s to remain bullish. If we can't, there is going to be a risk of us returning to right back down to the 610 area to fill our gap, or come a little bit lower before we try to bounce. There are lots of gaps to fill on SPY and the QQQ, which make me open to downside. And once again, we have a double bearish divergence on the triple Q. In fact, the RSI could be forming a triple bearish divergence. So that's another sign that this might be turning down. So for tomorrow, I wouldn't be surprised if we consolidate and then we eventually see some kind of like sell off in the upcoming days. I think that's the most likely possibility for this, but it's not going to be too bad. And then we're going to be forming a bottom looking for a nice bounce once we form the right shoulder. So we'll see about that. Another confluence is the IWM. We rejected really hard off 252. We rejected off 252. In this case, we tested 252 and now we're starting to reject again. So it looks to me like this is going to dip more. Tomorrow, look for some consolidation. If we can't break 252, we're looking for a dip back down to 248. ES is tricky. So look at ES. We have a almost symmetrical styled inverse head and shoulders, meaning we're exactly at the resistance. We had a left shoulder. This is the exact resistance where we got this rejection, where the head came. We're retesting this resistance. We're going to see if we get that right shoulder before we try to bounce. So I'll be watching that very, very closely. So keep that in mind, especially as time goes on. Now, at the same time, ES also has this bearish divergence, and we're at resistance. We have the pattern that's forming. I would not be surprised if we consolidate. If we end up breaking around 69.25, we could try to go for all-time highs, but if we can't, I'm looking for consolidation and a rejection back down to the lower 6800s or below to form that right shoulder, so I'll be watching that very closely. Look for some consolidation and a possible rejection right under 6900, then we could be dipping back down to the lower 6800s. On NQ, the same thing is essentially going on. We could be forming a left shoulder, a head, and a right shoulder, and we'll see if we basically bounce or not. But looking at the current setup, we're stuck between 25,800 is our resistance and 25,630 is our support. I presume that we're going to like consolidate just like this, and we're going to be looking for a move back down before we try to bounce. There's also a double bearish divergence on the MACD and a triple bearish divergence on the RSI on NQ, so keep that in mind. That makes me suspect this might be turning back down if we get a rejection near 25,800. Bitcoin, it's balancing a bit, but keep in mind that this is kind of stuck in our range. As we get close to 93,000, we like to reject, and as we get down to about 85,000, we like to bounce. Might bounce a little bit back up to about 92,000. We'll see if we turn back down, so watch that very closely. On Tesla, we are looking very bullish overall. However, I'm going to be watching to see if we're also forming kind of like an inverse head and shoulders here. This is kind of like I know it's a little hard to see. This is like a left shoulder. This is like a double bottom for the head. We could be forming like a right shoulder before it tries to break out like this. Tesla might retest like the 440 area. If not as low as 432, these EMAs might be retested. So I'm going to be looking for some consolidation and a possible dip right here. For tomorrow, look for some consolidation on Tesla, retest of like 460, rejection. And we're going to see if we can break 460. If we don't, we could return to the 432 to 440 area before it tries to bounce. So keep that in mind. On Nvda, we have an inverse head and shoulders. We're going to see if we break resistance or not. However, it's also worth noting that despite that setup, we also like to reject near our resistance. So if Nvidia could break 185, we could try to go higher, but if we don't, we might continue to consolidate for some time, and it may take some time before this finally breaks out. But as of right now, it's consolidating, so we might see a lot of consolidation near 180 before we try to break out. Apple is showing some weakness. This could be a bearish sign for the markets. We have a left shoulder, and a possible right shoulder. Could be looking for a small bounce for this right shoulder before it continues to fall. So it could be looking for 280, then a dip to 278 before it starts dipping lower. On Netflix, we're making lower highs here. We could bounce a little bit back up to like 102. Then we'll see if we continue to fall. On MSTR, we're making lower highs here. We have an inverse head and shoulders like pattern, but we could be forming a right shoulder back down towards the 170 area. Celsius also has an inverse head and shoulders that could be dipping back down towards the 40 area, and we'll see how it goes. Supermicro is also forming a nice accumulation. This looks a little bit more bullish to me, and this could be looking for essentially 35.9. If that holds, there might be a small bounce in Supermicro. On Palantir, we look a bit more bullish. We could be looking for an attempt for 185. On Rivian, we're also trying to rebound here. We're rejecting off this divergence. I see a test of 17.5 to 16.65 before it tries to bounce, but it could be forming a cup and handle. For SoFi, we're showing some weakness. Unless we get back above the 28s, we could be dipping back down to 25. AMD is consolidating. We have resistance at 219, support down here at 210. I expect this to consolidate and dip back down to 215. ARM could be dipping back down to 139, and we'll see if we bounce. PayPal could be looking for essentially 63, and we'll see if he rejects, but there is some upside potential. Coinbase is making like lower highs. We have a bearish divergence, so we could be dipping back down towards 265. Amazon is making lower highs, as you could tell. Unless we hold above 236, we're going to be looking for a dip back down towards 224. Meta is looking a bit more bullish, inverse head and shoulders, but because we ran so much and because we're also forming a divergence, there is a risk of Meta essentially coming back down like this. We could retest the 630s before it attempts to bounce again. But overall, it's still bullish. It's still bullish. Even if we come down to the 630s, we get a temporary pullback before it tries to bounce again. Google is a mixed bag. Although it had a bullish falling wedge, it's been trying to break out a little bit, but has not gotten a solid break above 323. So it might retest 318 to 315. We'll see if we bounce. On Microsoft, we're making lower highs. We have a double top rejection. We're going to see if we break past 486, and we could be turning back down to 475. On Oracle, we're forming a nice accumulation right here. As long as we don't lose 210, we could be looking for an attempt to push back up towards the 220s. On Broadcom, we're looking a bit more bullish. We're going to be favoring 400, and we're going to see if it rejects off there. That's where we have this gap. And we have rejected off the low 400s before, but I see this temporarily bouncing. So some stocks still look more bullish. Others are kind of weak, but overall, the market is still holding up. DJT has a double top, could be tipping back down to the lower 11s. And the VIX is continuing to fall. It may continue to fall and consolidate tomorrow as we have a bullish falling wedge. But then we're going to see if this breaks out or not. So keep that in mind. We have to be very patient. The 10-year is going to be affected by Jerome Powell and the Fed, and the dollar is kind of consolidating. So we'll see how it goes. But overall, guys, my view of the market is that we may consolidate tomorrow and just see a lot of sideways price action. The current setups do have risk of downside if we see these divergences pan out and if the VIX breaks out of its falling wedge, and it could be happening after FOMC, right? We have very symmetrical looking inverse head and shoulders that could be forming on ES and NQ. We have the left shoulder to head. We're going to see if we form a right shoulder on ES and NQ. We're at the resistances right now, so we'll see how it goes. But as of right now, I want to be very, very unbiased and give the market the time it needs. I do lean more in favor of these divergences panning out. It would be very nice to get the pullback before the end of the year squeeze we're anticipating, but we'll see just to be safe. And always watch your levels and be very, very mindful of FOMC, which is coming out for the week. So I thank you all for listening. Please enjoy the rest of your guys' weekends. And I'll be back very soon with another update heading into tomorrow before market open. I'll see you guys then. Thanks again for listening, and peace out.